What's going on, traders? Andrew O'Connell here with Pristine Capital. The thesis is still intact. If you watched yesterday's video, you know my trend model closed at a -3. The markets were down 5%. Things were looking a little bit dire, but I decided to stay in my positions because I was still green on most of the trades that I had taken. You know, my baseline assumption has been for a couple of weeks now, hey, we're starting to see growth slowing. We're starting to see signs of some of these growth stocks, innovation stocks, etc. These could be the best places to be. And I would say today's price action is still in line with that theory. So let's talk about it. Let's go through our box scores. Let's begin with the economic data that we saw this morning. Now remember, everyone in the marketplace has been super concerned about the Target earnings, the Walmart earnings. Oh my gosh, it's the end of the world. Now, this is a new thing. We're entering a recession. When we got basically a recessionary GDP print, you know, weeks and weeks ago, and it was, you know, the first quarter of negative GDP growth. So honestly, like, we're already almost the entire way through Q2. All these economists and people that are making these projections about the economy, like, they already have their look at Q2. Honestly, most likely we are in a recession, and I don't think that's really news to anyone that's controlling big capital. In terms of this data that we got this morning, right away, right off the jump, at 8:30, we got this Philly Fed Manufacturing Index, and it came in super weak. It came in at 2.6. And the consensus was a 16 reading. The prior reading was 17.6. So this was just another little indicator within that camp of, hey, US economic growth slowing. And when I logged in this morning to check what was going on in the market, I basically woke up to the worst case scenario. All these indices were down pretty big, and the S&P 500 was down, it was about like 1.5%. But the way we ended up closing was actually not too bad. We had for our box scores, S&P 500, it finished down 0.61%. The NASDAQ QQQ was down just about 0.5%. IWM small caps finished positive, up 0.16%. Now, the mainstream consciousness is now fully aware that, oh my gosh, this inflation, it's a horrible thing. And, you know, the economic growth, oh my gosh, it's slowing. This is a huge, horrible situation. But the small caps are acting as if the market is already starting to look through a recession. So very interesting. I try to rely on market generated information as much as I can. If I have a theory, I like to see it confirmed by the MGI. If it's not, then I know I'm basically just punting and I'm just kind of investing off my own thoughts. We had the Dow Jones, it was down 0.75%, and the ARK Innovation ETF was up 4.52%. So again, as the market starts to transition from being most concerned about inflation to potentially being a little bit less concerned with inflation and a little bit more concerned with slowing growth, these growth stocks, etc., that are completely washed out, that no one is invested in any longer. Now everyone's crowded into material stocks and commodities. You know, the thesis really has been that, hey, these could bounce or lead us. And so far, yeah, today, I would imagine for a lot of people that go deep into the price action, that's starting to become apparent. Now, here was another big win for the bulls. The S&P 500 finished negative, but the volatility came down, and that's a really good positive divergence. You know, the last big bounce that we had, we experienced the same thing. The day before the big bounce, we had S&P 500 down as well as vol down, and then the breadth was mixed. You can see, you know, very odd. The NASDAQ actually finished out with positive breadth, but the NASDAQ itself finished negative. My trend model also flipped from a -3 to a -1. So that worked out for me where I gave it just like one extra day and things are starting to flip to the upside. Now let's look at the heat map. We've also been talking about this rolling sell-off, and a lot of people have used this analogy like the generals are shot last. And honestly, like, it looks like that's what we're seeing. The consumer defensive stocks continued their fall from yesterday. We had Walmart down big, Procter & Gamble, Coca-Cola, and then Apple. I'm not sure if like investors suddenly heard that Michael Burry short Apple, and now everyone's like running for the hills. I know I certainly would. If I was an Apple bull, and most fundamental analysts, they're incredibly lazy. Apple is just such an easy company to be bullish on because it's done so well for so long. If I saw that Michael Burry took a short position, who knows, maybe some of these guys, they like did some digging, they figured out why he's short. I honestly don't know, but regardless, this stock makes up about 6.5% of the S&P 500. So the fact that this was down 2.5%, but the market still did okay, all things considered, you know, that's pretty good. And basically what it seems like to me is we have like the final leg of this sell-off, which is the stocks everyone still owns and those consensus crowded trades, longs, etc. And at the same time, we're starting to get like the bottom fishing happening in the more risky areas of the market that originally sold off. So very interesting, very nuanced. I watch this stuff pretty much all day, every day. So yeah, I think for most people, they would be like, what are you talking about? Like, this is mumbo jumbo. But yeah, this is sort of just, you know, my life now. Fanbase heat map. This was yesterday's heat map, so just to give you some context as to the stark contrast between these 2 days. Now let's take a look at our sectors. Now again, if you're just looking at the S&P 500, you're never going to see this stuff. But the Chinese internet names, these once again, they've moved into our top momentum slot. And I added a little bit of Chinese exposure last week via those FXI calls that I put on. Very, very small position for me because I know these names are so unreliable. But honestly, sometimes if you see a trend emerging, even if it's one that you don't want to latch onto, it can be good just to add like, hey, I'm going to add a small bit of exposure just in case it ends up taking off. But look at this as well. Solar energy stocks, they moved into our number 2 slot and they had a good performance over the dirty energy, which was down just ever so slightly. Emerging markets ripped higher, like all the risk on stuff ripped higher. And then some of our worst performers, we had consumer staples. Yeah, consumer staples was our worst performer on the day behind telecommunications. So yeah, definitely some changes that are happening in the market. And if you're just looking at the headline indices, you're never going to see these. Style factors, international value is up, international momentum, and high beta was our best performers. Now, in terms of earnings, we're making our way through earnings season. We had Applied Materials report after the bell. They actually missed on their earnings report. They're down a few percent. We had Palo Alto report, and that is actually up, a couple percent, maybe like 10% or so. And we're seeing an after hours pretty nice move in those cybersecurity stocks. This earnings season, it has been so rough, and there's been so many blowouts. We've noted those in depth. So yeah, it's good to see, we're getting to the end of the earnings season. In terms of just seasonality as well, seasonality hits a local trough at the end of May. And you can see a lot of times there's a balance at the end of June. That lines up with this monthly options expiration cycle, which ends tomorrow. These OPEX weeks, they can be incredibly challenging. If you're a short-term like day trader, if you're a punter, it's very difficult. A lot of people don't really understand it. They're like, during OPEX week, there's so many flows that are just moving around the market that have very little to do with fundamentals. So yeah, there's a ton of open interest at the 4,000 strike. At this point, we're a little bit far away from that. But yeah, over the course of this week, the market has really just done a whole lot of nothing. Now, in terms of this S&P 500 price action, just dive in real quick. And so far, running thesis is, hey, we have a double bottom here. We actually made an ever so slightly higher low. Now you can see we're trading a little bit higher in the after hours market. We just opened up for trade. Now, in terms of myself being wrong, the unfortunate thing is the market did not close higher today, the overall S&P 500. And, you can almost say like, oh, could this be one of the scenarios like here, where you put in a hammer candle, but you just can't close green and you keep leaking lower? Tomorrow is options expiration. Anything can happen. Honestly, I'm really just expecting the unexpected for OPEX. And then who knows, with a lot of these put positions rolling off the books, perhaps the broad market starts following those growth stocks. But regardless, I'm pretty much 100% invested in growth now. So even though the market was trading a little bit lower, most of my exposures were doing pretty well, thank goodness. ARK finished up 4.52%, and ARK, this is another reason I was trying not to get too worried over the past couple days. It's really done nothing over the past 4 sessions. And I got my entry at a pretty good trade location on this. Honestly, pretty lucky. I got in like really towards the bottom of this green candle right here. So I'm in a position where I can just kind of wait and see if we get up to that 20-day simple moving average. Now we also have a new monthly value area that's developing, and you can see we're actually not too far away from the monthly value area high that's going to be there for June. So yeah, ARK looking pretty good. The other names I've been trafficking in lately, Global E, this one, of course it got smacked yesterday, but a nice 8.68% performance. DLO, which is another one of my names, this one up 6.71%, and it's getting back inside this monthly value area. So again, like I'm harping on this, but I think for the average person that's just looking at the S&P 500, you're really missing out on a lot of what's going on under the surface. And I think this is where, we as market structure traders and technical traders, this is where we can really get an edge on just like the average person, because we're looking at these metrics every single day and we're looking at all the sector rotations, style factor rotations, all that good stuff. Amongst this group, not really doing too bad. Palo Alto, this finished out at 436, and now in the after hours, it's trading up around 478. Oh yeah, here's the other positive that came out of today. The VIX finished out below a 30. And for so long, for a couple weeks, we just could not make it back under 30, and we were stubbornly bid. Then when we had this breakdown here, this was great. Okay, maybe the market's going to make a move to the upside. With yesterday's plunge in the market, the major concern for me was like, what happens if we just stay above a 30 and we just start living here again? That's really problematic. But yeah, today, so far so good. Now we're back below a 30. So overall, I think things are still shaping up. Let's take a look at my trade blotter for today. I traded nothing because I'm pretty much in position with everything that I want to own, fully allocated at this point, good or bad. And yeah, I just didn't really see anything to trade during OPEX week. I never want to get caught in traffic or anything like that, trying to be too cute, what have you. So yeah, I did not do any trading for today. Oh yeah, and then another last thing that we'll talk about is cryptocurrency as well. So crypto, granted, this is obviously in a horrible trend. Despite all of the Luna UST, madness, worries, now Bitcoin is back above 30K. And for all we know, maybe it just loses its 30K level, in an hour. Yeah, good to see that Bitcoin is not really slipping into the abyss at the moment. So yeah, overall, I think things are looking good. There is one other thing that I would love to share with you. It was on my Twitter feed earlier, and it was Sentiment Trader that shared this. Okay, here it is. I just found it. This is from Mr. Buyside. Look at this. For only the 7th time in 22 years, last week, the smallest options traders spent 30% or more of their volume buying put options to open. The usual S&P put to call ratio I watch is not near extremes at all, but this chart perhaps shows that retail is already at extreme bearishness. So like, look at it here. I'm going to zoom in on this. And basically it shows, retail is heavily invested in put options. Maybe every retail trader is just going to catch this and they're going to catch the crash. It could happen, honestly. Maybe it is, but I think there is just as good, if not more of a chance that this could be a little bit of a head fake. With that being said, that about does it for this market recap video. I want to make sure I'm just staying fluid into tomorrow, and I'm going to expect the unexpected. Hope everyone has an awesome evening, and I'll see you all tomorrow.